Most traders, when they see a chart, only ask, will it go up or down? But the real question is, what will you do if it goes up? What will you do if it goes down? This is where the concepts of long and short come into play. Today, I'll explain what a long trade and a short trade are, what leverage is, and the logic behind it, the risks of leverage trading, and common mistakes. If you're ready, let's get started. At its simplest, a long position means opening a trade because you expect the price of an asset to rise. Example, Bitcoin is currently $60,000. You expect it to go up, so you open a long position. If the price reaches $65,000 and you close your position, the difference is your profit. In trading terms, this works like a buy trade. A short position is the opposite. If you think the price will fall, you open a short position. Bitcoin is $60,000. You expect it to drop, you open short. The price drops to $55,000. You close your position. The difference is your profit. In other words, you make money when the price goes down. Remember, a short position lets you profit from a decline, but if the price rises, you take a loss. Now let's talk about leverage trading. Leverage allows you to open positions larger than your actual capital. Example, you have $100. Using 10 times leverage, you can open a $1,000 trade. Sounds good, right? It's like trading with 10 times your money. If the price moves 1% in your favor, instead of earning $1 on $100, you earn $10 with leverage. But if it moves 1% against you, you lose $10. So leverage amplifies profits, but also multiplies risk. That's why. Leverage combined with knowledge is power. Leverage without knowledge is disaster. Also, pure knowledge isn't enough. There are psychological realities to consider. Psychological realities of leverage. Whether long or short, using leverage tests your emotions. You might spend hours in front of the screen thinking, it's coming, it's coming. A small price move can trigger excitement or panic. That's why before entering a trade, you must clearly answer, why am I entering this trade? What's my plan? Where is my stop loss? Common mistakes in leveraged trading. Opening a long just because the price is rising. Opening a short just because it's falling. Or using leverage thinking it will come back anyway. These aren't strategies, they're gambling. So, what should you do? Long or short doesn't matter, decide based on your reasoning. If you use leverage, always set a stop loss. Measure your risk in every trade. What percentage loss will make me exit? How much of my capital is at risk? And remember, you don't learn without losing, and you don't win without learning. Those who find this balance succeed. Long, short, leverage, these are powerful tools, but if you don't have control, they can crash you into a wall. In this market, it's not the fastest who wins, it's the one who survives the longest. In the next video, I'll continue with essential rules to keep you in the game. Don't forget to subscribe. See you soon.